It's time for...
This is Hit My Portfolio. Hit My Portfolio.
Alrighty, well, we're really excited for this one. We have a community member who has submitted their portfolio for our expert to give some ideas on how to make it a little bit better. Today, from the community, we have Brent joining us. Brent, welcome.
Thanks very much for having me, guys.
And our expert is none other than Adam Dawes. Adam, welcome.
Thank you. It's great to be here.
Now, Brent, we'll kick off with Ren giving a bit of a down low on what your portfolio is.
Yeah, so Brent's portfolio, it's got 18 holdings. It's got one ETF, the Vanguard Australian Shares Index ETF, which is about 15% of the portfolio, and then a number of individual stocks. Some of the bigger holdings are MinRes, 20% of the portfolio. We've got GQG Partners, the fund manager, at about 16% of the portfolio. So there's some of the bigger names. And then we've got Step 1 at 6 or 7%, Lavisa also at 7%, and Laserbond at 6%. So they're some of the bigger names in the portfolio. But Dawsey, we always like to start with a bit of a nickname.
Yeah.
So what have you got for us?
So, Brent, I think, and talking about Lavisa, so I do love this portfolio, and Laserbond, you do have laser focus on this portfolio. So, and it
I love it.
and it does have some elements from Elementos. It does have some elements of good in the portfolio, but we don't want it to stay out in the desert too long. We've got to bring it back in. So there you go. That's my nickname.
Wow.
Nice. So Desert Metals is also a holding in the portfolio
There we go.
for people playing along at home. Brent.
DM1's gone too. Sorry, I scrapped
DM1's
that.
out.
Okay.
Not out in the
Yeah,
desert anymore.
sorry.
All right, we'll have to change that nickname next time. But do you want to tell us a bit, Brent, about how this portfolio came to be?
Yeah, 100%. So in 2016, I bought my first stock on IPO. It was IPH. Did pretty well out of that. And then I sort of put that back into Megaport, which then went up I got a 4-bagger on that. And sort of I got really into it. I really enjoyed it. And sort of anything I touched sort of did relatively well for a period of time. And then 2021 hit and everything went to shit after that. So I've made every single investing mistakes in the book. I should have sold and didn't, and for tax reasons, all sorts of things. But look, fundamentally, that's kind of what changed my whole perspective on this. I realised I want shares to be a considerable investment for me in the future, because I really am sort of sick of work and I don't really want to do that anymore. I'd rather just earn lots of money for my shares. But yeah, so it was probably around end of 21, early 22 when I started to really understand my investments and understand what I was trying to achieve. And so you'd almost draw a line to the portfolio with a couple of things that look like turkeys and some others where I've got a lot more conviction and understand the business a lot more. So Laserbond's one of them, for example, where I like the story. I find it relatively easy to understand. And yeah, a couple other ones like Neometal's example, which was just basically I just bought it because someone told me to, and now I'm in trouble. You know what I mean? So yeah, I've thought a lot. And I spent a lot of time on my portfolio, like too much time, and just keeping up to date with the market and understanding everything that's going on. I really enjoy it. So yeah, it's kind of there's a few things. It's been sort of bolted on. There's a lot of things that have been bolted on, but yeah, the more successful ones are the ones where I feel like I've got a good understanding of them, and yeah, I think that's probably the best way to sum it up. How it all started.
Nice. Well, Dawsey, what are your thoughts? And I guess the point of this is to help Brent think through how he can improve the portfolio.
Yeah. So first of all, I think, you've got 18 stocks in the portfolio, or maybe 17 now, and plus some more international in there. So I think you've got a good diversification in the portfolio as far as the number of stocks. I think you definitely need to look at some of the weightings. Obviously, Min Resources is probably one of your a larger holding there at sort of 20%. So generally, it's around about a 5 to 10% weighting that we like to have in clients' portfolios. If it's a really good quality blue chip like Macquarie or BHP, I'm happy to go up to 20%. MinRes is actually a very good stock as far as that it's got the new world, which is lithium, and then the old world, which is iron ore, and then sort of mashing that together. So I think you're okay there for but yeah, I'd look at weightings. The second thing I'd definitely look at is asset allocation. Asset allocation is basically looking at the entire portfolio, but having a certain weighting into Aussie stocks, a certain weighting into international stocks, certain weighting into property, defensive income, those kinds of things. Now, you've got some international shares in there where you've got GQG and you've got some managed funds in there. But generally, for a balanced investor, you'd like to have about 30% weighting in international stocks. Okay, so building up that international component to around about 30% is probably going to give you the correct asset allocation going forward. So I think that's really important to think about starting with. Yes.
Yeah. So are you saying GQG is giving me that access, or is that
so
part of it?
Is part of that international exposure. Yes, that's correct.
Yeah, great.
It's a funny one because they're listed in Australia, but I think they're based in Florida over in the States, and they're investing globally.
Global. And it's done well. They've got lots of inflows coming in compared to some of the other fund managers that have outflows.
So one question I have, Adam, at least about half of the portfolio have position weighting less than 5%.
Yeah.
There's some that are 0.5, some that are just below 5%. When you say you're looking at positions of 5% or more, if a stock if you invest in initially the position is 5 or 6%, it drops to 1.5%. It's then back up to 2%. Are you saying you need to top it up to 5%? How do you play that balance between it initially being 5% and then underperformance?
Yeah, so first of all, you obviously, if you buy a stock and it starts to go lower, if you've got confidence in the management and you've got confidence in the market and the segment that it's in, then yes, you would continue to top up. You don't want to continue to keep topping up losing positions because then you're just basically throwing bad or worse money and bad, going forward. So I would definitely look at the position. What I usually do for clients is a third, a third, a third. So in other words, or 33. Yeah, so a third, a third, a third. So we would take an initial position in the stock. And then what I would put another third a little bit lower. So if it does continue to go lower, we're going to average our costs down. If it starts to go higher from there, at least you've got some position in there, and then you can start to top it up as it goes higher. But looking at that third, a third, a third with a 5% weighting minimum in any one stock. Some of these stocks that you've got in there are really good stocks, but if you've got 0.5% or 1% in the portfolio, it's actually not doing anything really. It needs to have that concentration, and I think that's where people go, oh well, I'll just put a little bit in here, a little bit there, but it really doesn't meet the portfolio of a structured portfolio that's well thought out.
Yeah, and some of those really small ones are sort of just starting positions. Like what I did with the Visa, when I first picked that up, I picked up 25 shares, and in the last sort of 6 or 12 months, I picked up 25 sort of every month or so when I had a little bit of cash.
Yeah, great.
So that's why they're a little bit all over the place in terms of their weightings. And there's a couple like Baylor's one that I was holding off to see how they were going to use their cash. And in the last 2 weeks, I think they've made $40 million worth of investments into a couple of small businesses. So I'm now sort of a bit more sure of where they're going. So that might be something, for example, that I'll top up in the next week or two, potentially. And if I run out of ideas, then I just put it into the Vanguard, the VAS. So I sort of have a continual way of investing each time. And I sort of look at what's my best option at any one time in that respect. That's what,
so a regular contribution strategy is a great idea.
Is that a...
Absolutely.
Yeah, okay.
Absolutely. It's a great idea. The idea of the regular contribution strategy is that potentially you'd put it across the entire portfolio. I know that's a little bit difficult with this one, but you would just continue every month to put more money in. If the market's up, you're putting more money. If the market's down, you're putting more money in, or the stocks are up and down. So regular contribution strategy, absolutely. And then if you are not a lot of these, or Soul Patts pays dividends, but turning on the dividend reinvestment, okay? So that combining that, compounding of that over the time will grow the portfolio, and that's how you build the portfolio over a longer period.
Yeah, 100%. That makes perfect sense. And that's what I intend to do with the VAS as well. Just leave it there until I turn 60 or whatever, and hopefully it's worth a lot more than it is now, So how do you have like you said, every month or so you put into the market and then it goes across your portfolio? I don't quite know how do you do that with that amount of stocks?
You can't. Yeah. It would be more, you'd have to pick the ones. There are model portfolios that you can add regular contributions, and it will go across the entire portfolio. For this one, you just need to continue to run those ones and always topping up the ones that are potentially winning. It's like gardening. You got to get rid of the weeds to let the flowers grow.
Yeah.
Nice.
Yep.
Yeah, the brokerage cost alone on doing it across all 17 would be crazy.
Yeah.
But like if there's a more concentrated list that make more sense, then yeah.
Oh, I see. Yeah, I see what you're saying. Yeah, yeah. Well, I use CMC, and I think they don't charge any brokerage under $1,000. So that's why
okay.
like I don't mind picking up $250 or $500 at a time and just chipping away at sort of like that. If that makes so, even if I have $500 sitting there, I could buy 2 small positions at $250 each.
Yeah.
Just to So
you could, yeah, you could. A lot of admin, but if you want to do it,
yeah.
the problem is as
Yeah,
well, I guess,
sure.
with Australian stocks because they're not fractional. You know, if the share price is like $150, then all of a sudden you might not be able to do your regular contributions.
Yeah.
But yeah.
Yeah, I'll tell you what, if Laserbond goes from 70 cents to $150, that won't be too big of an issue for me, I don't think so.
Then you'll get your retirement dreams.
Yeah, I know, right? No, it sounds great. So basically, just a bit more overseas with US exposure. And what was sort of the other little point you'd like me to think about?
Yeah,
Get rid of the
weeds.
Yeah. Some of the stuff that's not working for you, just get rid of it, cut it, move on.
I think the main thing to think about here is the percentage of your portfolio and your weightings.
Yep.
What's the point in having something that's 0.5%? Is that really contributing to anything in the portfolio? And is there an opportunity for that money to go somewhere else that's going to be a bit more meaningful?
Yep.
Nice, Brent.
Well, thank you very much. That's amazing.
No worries. Well, thank you for submitting, and we really appreciate it. And good luck with it.
Thanks so much, and thanks for the amazing resource, guys. This is just an awesome podcast. I can't stop listening to it. So,
we
thanks again.
that.
You're doing amazing work.
Yeah, we appreciate that.
Thank you. If you'd like to submit to Pimp My Portfolio, just like Brent, you can head to equitymates.com/contact, and all the information is there. We'd love to hear from you. And if you would like to be put in touch with Adam for investment advice professionally, then head to equitymates.com/advice and we'll connect you. But Adam, as always, thank you so much.
Thank you.
Equity Mates. I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful